everyone, myself Vaibhav. In today's session of Visual JForex, I will be explaining to you the use of a component named stop strategy. Ironically, we here try to build and start the profitable strategy, but in today's session, we will be taking a look at the aspect which we rarely use, but it is useful in circumstances where it is required that we stay out of the market, or if we have defined certain parameters. If those parameters are met, we need the algorithm to stop. In such circumstances, we can use these component. These included under the miscellaneous component. You will find it listed amongst this. In prior session, we had seen the use of sound alert. Now it's the turn of stop strategy. As is the name, this block kind of permanently stops the strategy. Not permanently. If you want to restart again, you can restart it, but you will have to do it on your own manually, and there is no condition as of now which will again restart the strategy automatically. So here this is listed, and now we head to the J4x platform, Visual J4x platform developed by Dukascopy Bank SA. You will find this component listed here. Stop strategy. This is fairly simple to use, but what comes before this stop strategy block is more important. And to this block, there are no components. You can't define any parameters within the block. Everything needs to be done beforehand before we join the flow to this block. Now comes the question when we need to stop the strategy. Now that's always up to you, but let me give you some example. If there is undue volatility, or if there is key important data release coming up, and during those circumstances, if you need to stop the strategy, you can use this block. Or suppose it is the Friday session and only few hours left, even as you might be aware, at 18 GMT every Friday, the margin restrictions come into play, and if you want to stop your strategy before that, you can set the time parameter using the get time unit, and you can stop strategy. Or on certain days there are key releases after which we see too much of volatility. Here you can see that sudden jump happens, and many of these instances you will find in market where if we uh, don't really use the algorithm judiciously, we might suffer undue losses if the stop loss parameter doesn't really work, or there is a dry out of the liquidity. If the liquidity dries up, then you will see that your stop loss or target price will execute far away from the preset criterion, and many times it becomes imperative to stop the strategy before such events. So you can set the conditions, and before that trigger point, the algorithm will stop, the strategy will stop, and that's how you can use this component block. Now, if you want to use, for example, say the time factor as one of the reason before stopping the strategy. Suppose if there is some key data release coming up, or some monetary policy announcement coming up, or any other key release is coming up, and you know beforehand that at this point in time, at that particular point, there will be increased volatility, and you are anticipating big moves, and you don't really want to get into trouble, and you simply want your algorithms to stop trading and close any positions if they are open. We will have to use another block, the close and cancel, for closing position. We will take a look on that block also in coming session. For today's session, the focus is stop strategy. Suppose on every first Friday of every month, we have the NFP, the non-farm payroll data coming up for the United States. And I'm giving you just the example. Suppose if you want your algorithm to stop trading before that, the first Friday of every month, you can simply define it. All you have to do is take a look on the calendar, see what is the date of that event or that Friday, and then depending on that, you have to define the conditions using the if else block along with the get time unit. And now we will take this. We will define the new variable as a time and date ed. Okay, and then we will need the td, that is the current day. We have to set day of the month. Okay, the conditions for time unit are right. We can also set other parameters if we want the algorithm to stop trading at particular point in that day. Then we have to use these other setting options like day of the week, hourly, minute, or even second. We can pinpoint and stop the strategy just before the release, or we can even use this option of not trading, not taking any trade on that particular day. And if we are going for that option, it's fairly easy. Now we have to set the conditions using if else statements, if else block. Here it is, the first input, and the first Friday of the month can be any day of the month. And for that, now here as you can see, this was the first day of the month, so all we will need to do is if the time and date equals 1, then there will be no trade, and our algorithm will stop trading. So this can be one condition. Suppose if you see that it will be fairly difficult to trade if there is too much of volatility or there is sudden spurt in volatility, you can set that condition using the ATR, and the resultant spike will be easily spottable. Now if we want to use the ATR to define the conditions, we will have to first find the ATR. ATR is listed amongst other criterion, other parameters. Now this is going to be independent of this, so I am going to remove this blocks. We are doing this just for getting familiar, and you can define these conditions whichever way you want to define this. Now this is the ATR block, and what I'm going to do is set hourly ATR. Now whatever is the usual ATR, if we see that because of any unforeseen circumstances or because of any data release, if there is too much of increased volatility, now we can take a couple of ATR blocks and do the comparison. Even we can use it in context of the daily ATR, Friday's ATR also, that can be done. Now what I am trying to do here is we will simply focus on the hourly aspect. We will not really go into the details of building a full-scale algorithm, not yet. In coming sessions we will do that as well, but today is not the day. Now if we see the current ATR for current hour jumping too much compared to prior hours ATR, Here we will have the out value. I have included this third ATR block, but we are not really going to use it still. Let us see. I will define it one parameter at a time. Okay. And let us get a few if blocks, components, logical, and here it comes. And I think I forgot, but we will also need the calculation expression, mathematical, and here it is. Now, suppose we want to set the criterion at 3 times of usual ATR, and if the current hours ATR jumps more than 3 times the prior hours ATR, then we want the algorithm to stop. So all you have to do is take the ATR value, take another variable, create new. We will set it as ATR condition. You see, start value will be 3. Alright, save. Now we take it here. We do the calculation A1 into A2. Result of the calculation will be ATR predetermined condition. Okay, APC. You can name it as you want. Instead of joining directly, we are going to take this. Now, what is the condition to stop the strategy? It is that the current hours ETR here should be greater than 3 times the prior hours ATR, and whenever this condition will be fulfilled, the algorithm will stop. Now here we had not really built the logical algorithm. Now I am just focusing on the stop strategy algorithm. So we are assuming that there is already the fully functional algorithm working, and all we are doing is adding these stop strategy condition. So we will now join this, and this is first input. The current RCTR is greater than 3 times the prior RCTR, and then the strategy will stop. So this is one of the way, not the only way. So this is also one way which I think is likely to grow helpful if you see that there is sudden spurt in the volatility, or even you can define using the trade events if one trade position is open and after that you want the algorithm to start. Suppose if you have defined the algorithm which you want the it should be executing only one trade in a single day, and if you see that one position has been opened, after that you can stop the strategy and it will stop functioning. So there are multiple ways you will have to figure out how you can utilize this particular block to your advantage to stay safe and stay profitable in the market. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback and I will be more than happy to take the discussion forward. Do subscribe to the Dukascopy webinar channel to stay updated on the market development. There is a lot more to come. Thank you all for joining in. Goodbye.